we really want to dimension, um, the impact of the key drivers of growth for sustainable economies. So in my first episode, we had analyzed the Sustainable Trade Index, which was released by the Henrik Foundation. And in that report, they had analyzed the top performing economies. And one thing that was pervasive for all these economies was the role of technological infrastructure, innovation, labor standards, and social mobility. And so it would be nice to get your perspective on why you believe that these key areas of drivers of growth are imperative to maintain a sustainable economy.
Yeah, thank you. The Sustainable Trade Index is very interesting, and it has very important applications to us in Africa and in Nigeria particularly. It talks, advocates for open trade, but at the same time recognized some of the emerging trends about countries being more conscious of their domestic industrial policy, which is about why we must be open to the world. What exactly are we offering to the world? Do we have our own industries? Do we have policies to promote the growth of our own industries so that we can have value-added services, not just commodities to export to the world, especially in the context of, we're talking of the Africa Free Trade Zone initiatives and, of course, the overall global trade. In that context of domestic of the local industrial policy to promote local industries, you link that back to employment. First and foremost, link that to productivity, and technology is a major driver of productivity, and technology as a major driver of productivity is also a major driver of economic growth. If the industries are not using the right technology, if the technology infrastructure is not in the right place, you won't have the right kind of industry, and overall economic productivity will be constrained. The link to that on the industry side and domestic policy is that it's also those industries that will generate employment, especially for a young country like Nigeria. So, and the other linkage is if the industries need to create jobs, do we have the young people, the education system that have trained people with the right skills to be employable in those kind of industries? So domestic openness to trade, domestic industrial policy, technology for economic productivity, industries, education system, and employability, they are all very related. And overall, when we talk about young people, especially employability, we are talking about ultimately about human mobility. When they go to school, are they going to have jobs? And are they going to prosper in our economy? And will they leave? Do we have the resources to keep them here and produce and impact our society? So if I spin the STI index, I will call it, in the context of Africa, it's about inclusive growth. And how we do it, being environmentally conscious that we also do not destroy the environment, we preserve the assets of today for the next generation.
Yeah, thanks for that. You talked about inclusive growth, inclusive trade. And if you know Mr. Olu Akanmu is the fact that you are, may I call you an evangelist of digital economy and financial inclusion. I know that you advocate strongly for those two areas. Why is that important?
Thank you. Digital economy, it's if there's one thing I've learned so clearly about digital economy, and I've seen it practically in my life, in my career, it is the whole concept in microeconomics of how digital economy crashes transaction cost massively, of economics of business. Economic transaction costs are crashed massively. I mean, the way I always illustrate it, it's if you don't want to think economy, just think basic. Before the mobile app came for banking transactions, how we have to go to a bank to do a transaction, take the only inefficiency of going to a bank branch, take a public transport, how you can do that very quickly on your phone today. That's how massively transaction costs are crashed. Economic transaction costs are crashed. And the implication of that in terms of digital economy and digital technology is that it opens up markets that historically commercial players have excluded. Markets that, because of the historical structure of those industries, we traditionally ignore them. We do not consider them as part of our traditional commercial markets. One of the things you note in Nigeria today is that a lot of our industries, our former industries, are likely serving 40% of our people. Maybe they barely serve another 10% on the marginal side, but 50% of our people are excluded. Example I always give is the fact, for example, that access to digital payments, but in terms of the adult Nigeria, according to the EDFINA access to finance research data in 2023, is just 47%. If there are industries where you find market reach being greater than 50%, to 80% in Nigeria, is because those industries are using technology, as you will see, for example, in telecommunications. So the power of digital technology to crash transaction cost, to expand the reach of markets, and to deliver a commensurate social impact by bringing excluded people into commercial markets so that we can deliver financial services, telecommunication services, health services, education services to many of our people who have been excluded from our traditional model of delivering these services. That is the power of our digital economy, for which I think my journey from telecoms to financial services and fintech, I've seen it so practically about the power that the massive transition costs, the potential to bring new players with new business models to increase competition and expand reach. These are some of the very important things. Let me also mention something else. The fact that digital economy and digital technology also tackles a big challenge of information asymmetries in our market, linking technology to economics now. If you look at things like credit, access to credit, the big issue in terms of access to credit for a lot of our people in Nigeria, where access to credit is about just 6%, is information asymmetry. Who is a good borrower? Do we know who's a good borrower? Do we know where they live? How are we going to reach them? How are we going to collect our money? With a digital technology and infrastructure, many of these information asymmetries in terms of identity, payment, transactions, where they are located, can be accessed and can be processed, which will ensure that both the demand side issues and supply side issues of things like access to credit can be tackled. And so the potentials are extremely very huge. On the part of small business, what it also does is that the access of a small farmer in a place like Portiscombe, for people who are listening who may be anywhere in the world, these are places that are like thousands kilometers off from Lagos. They can be connected through a digital economy, a strong industrial value chain, through a digital economy to factories in Abuja, factories in Lagos. And one of the big things, for example, which World Bank highlights about our economies in Africa is that we have a productivity problem because our businesses we have too many micro SMEs. Productivity increases with the size of business. Digital economy can address that. It's one of my favorite hypotheses that when you bring small business through a digital economy in very strong integration and coordination with big companies in a digital financial system, you essentially create a value chain that will be addressing the isolation and the low productivity issues of this small business because they work together as an holistic whole. A small farmer who is supplying to an aggregator, taking those products and getting paid to a Diageo or a brewery in Lagos, ends up being essentially like a part of that brewery company. And that's one of the things that addressing productivity challenge that digital economy can do. In many ways, the impact is huge, but we only need to tackle access and reach and affordability to impact our people in a massive way.